Hey guys, welcome back to another episode of Ryan Makes Sense. If you're watching one of my latest videos, I forget the name of it, but I was scanning through stocks and I found a stock that went 200%. So what I did was I created a scanner and went back in history and looked at the financial data points for that stock and created a scanner so we can find stocks similar to that stock that could potentially make a move. So we're going to look at that scanner. We're going to look at all the stocks that fit into those parameters and see if we can find one to add to our weekly Robinhood investing challenge. Let's go. All right, you guys, we are on the world's most powerful website, finviz.com. I highly recommend you checking it out on your laptop, desktop computer, very hard on mobile phone. So I am in my screener section and I called this missed 200% screener. So this is basically going to mirror all the other stocks that were similar to the one that ran 200%. So it looks like we have 2 pages worth, 21 stocks. So I just want to set some ground rules because we're going to disengage. We're going to disqualify some stocks if the sales is less than the income. So let's say company ABC makes 100 million, but they lose 110 million. That's a negative. So just a heads up there. Here are the financial data points right here so you guys can see. I'll move my head real quick. So quick ratio over 1, that means they have cash on hand. Net profit margin is positive, so these are profitable companies. Price to earnings is under 10, meaning that it is essentially undervalued. The long-term debt is under 1, meaning they don't have a ton of debt. The target price means that the target price is above the current price. So analysts are forecasting that the stock should go higher. The gross margin is over 15%. Not a crazy number here, but it's, going off of what we found that moved 200%. Shares outstanding, very low float here. The float is also under 20 million. Operating margin is positive and institutional ownership is at 40% plus. So I'm gonna bring myself back. Let's look at the first 5. We have AMR, ARCH, BSET, BXC, and CRWS. We'll look at them individually. They are loading. Let's look at AMR. I'm going to make myself smaller. All right. All right, AMR, they make 3.94 billion in sales. They make 1.32 billion on top of that. Very profitable, good cash, very low debt. Insiders are selling. Why? Institutions are selling. Double why? The price earnings is 185. Let's just see. It's $137 stock. Is that cheap or is that expensive? Wow, look at this chart. Let's do some quick math. So everything is in the billions except for the shares float over here. So what I do is I do sales plus income plus cash minus debt divided by the shares float to get our current stock price. So the PE is saying this is very, very cheap. I'm sorry, very, very undervalued. So let's do our quick math here. Everything's going to be longhand. So 3,940,000,000 plus income of 1,320,000,000 plus the market cap of 1,990,000,000. All right, now let's add the cash. Wow, big sales. Okay, so the cash is plus 301,910,000. Yep. Let's remove the debt of 10,970,000. Not that much. Okay. Now we're going to take this and divide it by the shares float, which is 13 million. Divided by 13 million flat. This is a share price of 580 bucks. Wow. Look at this. Insane. It's already gone up from $2 to 180. You guys, okay, so since it's art, I mean, this is a great value, but we need to let it come down a little bit. Um, I would say 131. I mean, even then, that's still really, really good. I'm just gonna make some notes here really quick. Where'd my notes go? Okay. So, we're gonna make this our 5/29. Today is the end of May, but by the time you see this, it'll be later, which is fine because my trading style, investing style is looking at the macro, the months, the years, and then sniping around the days and weeks for solid companies. So AMR, wait for it to catch its breath. Went from $2 to from 2 to 170. Insane, absolutely insane. So we missed the boat on that one. Let's look at the next one. ARCH. Let's look at the monthly here. Oh my God, we missed the boat. This one went from 22 to 164. We missed the boat on this, but let's just take a peek. Oh my gosh, same situation. Very, very almost the same. I'm not gonna do the same calculations, but it's literally the same numbers. ARCH. Yeah, wait for it to catch its breath. It went from 22 to 164. Good Lord. Yeah, 167. Are insiders selling here? Yeah, they sold some. Not as bad as the other one, but freaking insane. Wow. Okay. We're gonna let that catch its breath. Maybe it'll come down to 76 right here at the 50 SMA. All right, now we're into furniture. A lot different than coking coal. And we're looking for something that's at a bottom because that's where the original stock was. I think the ticker symbol was LMB. So this is, I wouldn't say this is a bottom, not a bottom, but look at this bearish candle setting up on the monthly. Let's do some math here. So they make 400, everything's in millions. So I'm just going to do 475.4 plus 22.5. They have no debt, but they have some cash. So they have 60. So we're going to add plus 61.62 million and then just making sure they have debt minus 0.64. Okay. And let's divide this by 8.36. So a $66 share price. Right now it's 13. This could be really good. And I'm just going to open up a new page here. We're going to go to fintel.com and we're going to look at BSET. It's in a bearish trend right now. And I say that because these candles right here are all pretty bearish looking. The older Finviz data shows that there's 61% institutional ownership. I'm going to say there's less. I'm going to say there's probably around 59. And I only say that because it's starting to break down. And I think institutions and hedge funds realize that. Wow, it's at 71. Ring the alarm. They're actually buying. They're loading. They're not loading. They're buying the dip. Vanguard, BlackRock. BlackRock actually decreased. Okay, JP Morgan bought a lot. No, $1,200 worth. So going back to Bassett Furniture, I just want to see if they're improving their income or revenues. They're improving their cash, good for them. Total assets 406 million, total liabilities 210 million. So that's about a 2-to-1 ratio there, which is good. Total revenue is kind of flatlining. Net income is kind of flatlining. Insiders are buying-ish. So I guess if I would wait for this one, but Yeah, I mean, this is historically speaking not a bad time to buy. So I would actually categorize BSET not a bad time to buy, in my opinion. I'll put all these on my watch list, but I like these. Very undervalued. Inst purchased 10% more since Finviz showing. Perfect. Okay, cool. That's a good one. Good to know. All right. BXC, $84 stock. Did we miss the boat here? Kind of looks like we did. Let's just confirm. Oh my God. It went from two guys. It went from $3 to 100. We missed the boat. Oh my God. It's reversing too. Oh my gosh. And it's still undervalued. This one's tough because it already ran huge. They don't even have $1 billion market cap. Oh my God. So we're going to do sales plus income. So 3,950,000,000 plus their 180 million, 5 or 600,000. Yep. They do have some debt, so this might not be as pretty as I thought. Cash and short-term equivalents, we'll add it, plus 298,940,000. Yep. Total debt, there we go, 500 minus 565,500,000. Yes, okay. And there's only 8 million shares outstanding. This is going to be insane. Divided by 8,810,000. $438 stock price is what we're getting. That's absolutely crazy. That is just absolutely crazy. Our institutions loading here. Let's see. BXC. 100%. Yep. It went from 87% to 100%. I don't love it, but I mean, it's trading at the same levels that it was back in December 2021. So it's hot. It's definitely hot. BXC, very hot. Might need to cool down, but undervalued based on traditional calcs. You guys, we're finding a bunch of winners here, honestly. The first two, I would say they probably can cool down, but this is a very bullish looking setup. All right, next one is CRWS. Okay, CRWS. Woo, kind of looks like a trap. They pay us 6% dividend. They make 79 million. I mean, let's do the math. Let's run the numbers. Numbers don't lie. So everything's in millions. So I'm good to shorthand 79.1 million in sales plus 7.3 income. Whoa there. 79.1 plus 7.3 income. Plus cash minus debt. They have 1 million in cash. Not that good. So plus 1.6 cash minus debt of 0. Okay, so 88. And shares available is divided by 9.04. $9 stock, it's at 516. Institutions are buying. Let's just see. CRWS. I don't know if I believe that. So it's showing 40% ownership, older data, and Finviz is showing 40%. I just don't know about this one, you guys. Dividend. That's a big dividend to pay. I don't have Thinkorswim open. I'm going to put this one as a do more research. This one's gonna have to be do more research. CRWS, do more research. Institution insider buy 6% div. Yeah, that's I don't want to say it's sketchy, it's just a little overvalued. Considering that they pay a dividend as well. You know what I mean? And I'm going through these kind of fast because we can see when the stock's already getting out of gas or if it's too high already. Covenant. Oh, very bearish candle right here. The numbers look good. I mean, the price, this looks good. Institutions are buying. I just think, look at this candle right here. Yeah, I think it just needs to pull back. $30, so about $50. Yeah. I like this stock. It's just a little hot. All right, next one we are looking at is ticker symbol EGLE. I'm just gonna look at the monthly to see where we're at. This is a perfect example of why we're gonna skip this one. The stock price used to be 300,000. Now it's $40. It doesn't look bad technically. I mean, we got a director buying $80,000 worth. Still, it's revenues decreasing, net income decreasing. It could be a good company. This company has been around for a long time, and I know it's been known for manipulation. So we're gonna pass on EGLE. HHS, Harte Hanks, the $5 stock. What's going on? Used to be 140. I don't know if they've done splits or not splits, but I guess dilution. Let's run the numbers here, I guess. 204.3 million plus 31.8 income. All right, let's add the cash minus the debt. CEO. Good. Okay, the CEO owns like 330,000 shares. That's comforting. Cash is 10 million, so plus 10.36. Total debt is 0.21, so minus 0.21. Okay. I like that this is not a dividend. Thank goodness. Okay. So we have the 246 mil after cash everything divided by 5.22. So this is a $47 stock. The analysts have it for $20 somehow. So what am I missing here? HHS, let's see. HHS. It's not showing up on Fintel. What am I missing for HHS? I'm just going to take a look at the website. Marketing, customer, logistics, sales. Not bad, I guess. What about they're doing a share repurchase program, so that's good. That's bullish. How much? $6.5 million worth of its stock, 10% of its outstanding. Okay, so being aggressive, cash is dwindling, but so total assets 66 mil, total liabilities. Whoa, their liabilities dwarf assets. That's not good. Income is not bad. Wow, their liabilities are more than their assets. That's crazy. I just want to look at the weekly chart on this one. Yeah. It's trying to... Yeah, I'll have to check back on this one, but it's not looking good. So EGLE pass was 300,000, now 5. HHS, liabilities greater than assets. That's always a red flag. Watch in 3 months. Okay. Yeah. Nothing's really yelling at me yet. Okay. Did I speak too soon? Let's do the math on this one. The market cap is not over 1 billion, so we're not going to include the market cap in our calculation. Just wanted to throw that out there. So they make 1 billion 40 million. And they have 76,600,000 in income. Good for them. Let's add cash, remove debt. There's no significant purchases. Net income's kind of going up. Same with revenues. They have 355 million cash. Nice. Plus 35545. Okay, total debt 0. Okay. And we're going to divide this by 19 million. Divided by 19 million, 54, 540,000. $75 stock price. It's almost gotten up there before. Institutions own 92%. Let's just check. HSII, I'm going to say maybe more. 106% now. Okay. I like this. I think this is the best one. Okay. HSII, volume's kind of, it's picking up. Okay. HSI, $75 PT based on calc, currently 25. Institutions, buy, check Thinkorswim for support. I like this one the most so far. I like this one the most. All right, can I make it stand out? There we go. Okay, moving on. Another furniture company. Okay, 25. Let's see what we've got going on here. Okay, so 1 billion, 30 million in sales, plus 82,400,000 in income. Let's add cash, remove debt. Oof, no buys, only sells. Not great. Again, revenue and net income are kind of the same across the board. Plus 123 million, 130,000. Okay. And the total debt is 0. Perfect. We're going to the top. And we're going to divide this by 13, divided by 13,670. $90 share price. That's amazing. Let's look at Fintel. It has to be up. So Finviz says 98% ownership. This is 90. So it's down. It's actually down. Okay. All right. You can see my screen. I would like to see it test this 200 SMA. This really light line right here. I'd like it to touch that. But this one's really good looking. HVT, really good looking. Watch for 200 SMA touch on monthly. Undervalued. Inst sold 8%. All right. Awesome. Let's go down and look at the next. IIIN, IPI, JAKK, NWPX. Steel companies, okay. Look at this one, right, closed right at the 20, touching it. Okay, so kind of looks like a cup and handle. Here's our cup handle, and now it's making its move up higher. So I would say 38 plus 28, it's about a $70 stock price. It's at 30, so it's about a 100% move. Let's see. Let's do some math on this one. Pays a little dividend, which I'm okay with. Okay, so 761, everything's in millions. I'm good. 76.1. Plus they make 79 in income. The market cap is under 1 billion, so we're not going to add the market cap. Revenue's down. Net income's big time down. Jeez. Okay. Plus they have 48.32 cash. Minus any debt. No debt. Minus 0. Perfect. So now 88 divided by 18.5. $48 stock. So not terribly bad. It's currently trading at levels that we saw back in 2018 and 2016. So I like this. Let's see what institutions are doing. Institutions own 79%. That's the old data. New data says 95. Wow, 79 to 95. Almost 96. Holy kaboli. All right, well, we know what institutions did. Holy cow. Okay, so IIN, huge institutional ads, undervalued. Good chart setup. All right. I think this one's my new favorite. IPI. I have a love-hate with this one. Okay, so historically not a bad price. It did go to over 118 recently. All right. So looking here, it looks like it's currently undervalued, but in the future it's going to be very overvalued. And that's because next year they're accounting for no sales. So if that's true, I would expect to see big insider buying or selling, I'm sorry. Okay, the CEO sold a lot. Not a lot in relation to his current outstanding shares. Yeah, it's not bad, honestly. I guess we'll just do the numbers here. It doesn't look too good, but they make 320.1. They have 45.3 in income. Let's look at their cash and their debt. Cash, they have 18, so plus 18.51. Total debt, 0. Okay, so now let's take this divided by 9.19. $41 stock, trading at $18, but they're guiding for no growth this year. Do institutions believe that? Institutions own 58%. Yep, so same here. So just you can see I had a major run. Literally ran 10x. Now it's coming back down. So yeah, we're gonna pass on IPI. Well, JAKK. I don't know what this is. Wow, they almost do $1 billion in sales. Let's look at the bigger picture. Leisure. Wow, looks like a bottom play. Okay, Okay, let's do the math. Nothing is over $1 billion, so we're gonna do 782.8 million plus 88.5 million income. Very nice. Let's add cash, remove debt. Nice. They doubled their cash position, so plus 85.3. Total debt minus 67.15. All right. What was their assets? 405. Liabilities. Okay, good. Just want to make sure. And we're going to divide this by the shares. This divided by 7.09. $125 stock. That's nuts. Are institutions buying? It says institutions own 45%. I'm going to say they own more than that. 48. Not too much more, but this is really good. This is really good. I just got to see what they do. What type of leisure is JAKKS? JAKKS. What? JAKKS Pacific? What? Is this like toys? Sorry, I'm just learning. Okay, interesting. So, okay. You guys, I think I really like this stock. CEO owns 186,000 shares, not too much. I like this. I like this a lot. This has great sales, inst buying, very undervalued. All right. Great find right there, in my opinion. All right, let's move on to the next one. MasterCraft. Boats. Considering where the economy is going, I think I'm gonna guess this is gonna go down. Yeah, it's gonna go down for show. Recreational vehicles? Okay. Are these like boat cars? Let's see. No, looks just like boats. Okay. Let's run the math. Wow, they don't have that much debt. I thought the boat company would have a lot more debt. Okay. We obviously don't want to buy now, but let's find out when we would want to buy. So they do 713.1 in sales, and they're profitable, plus 78.9. Add cash, remove debt. Hey, their revenue's growing too. That's good. Plus 34.2. Minus total debt is 56.55. Okay. Divided by 17.34. $44 stock trading at 26. Yeah, B. Riley Securities has similar price target as I do, so I feel good about that. Let's see what institutions are doing. Institutions own 94%. Now they own 105, so they're buying the dip here. They're buying the dip. It kind of looks like a Head and Shoulders, right? Left shoulder, head, right shoulder coming down. I think so. So we're going to watch this next month because what we could see is a reversal candle. So this candle is going to close ugly. Then the candle that's going to close for June might come down here and touch 22. Might come lower. So we're going to watch this next for my next month. MCFT. Watch for June, in my opinion. Big inst buy. Decent pattern. undervalued. Okay. All right. Honestly, guys, these are really good stocks so far. Next is NWPX, Northwest Pipe. Ooh. This is heading for tough times. It looks decently priced. Let's do some math. Okay, so they make 447.4. They are 30 million in income. Let's add cash, remove debt. Yeah, not too many sales considering the total shares that they own. It looks like a lot, but it's in relation to the total, it's not too much. Total revenue kind of plateauing again. A lot of them are like this, except for the boat one that we just looked at, which is weird. So plus 3.68, 481, minus total debt, minus 97.49, okay. Divided by the 9.67, so $39 stock, trading at 27. Institutions own 86%, but probably less. NWPX. 86 is old data, 98 is new data, so it means they're buying actually. They're buying. Sales over the past 5 years and earnings past 5 years, 28 and 42% respectively. So this is not as bad as it looks. So NWPX, not as bad as it looks. Do more due diligence on Thinkorswim. Put on watch list. Yeah, okay. All right, let's check out the next handful. RCMT, RELL, RMR, SPOK, and VRTV. I'm drinking a michelada. We missed the boat on RCMT, it looks like. Oh, yeah. From $1 to $26, actually. That's how life goes. And then we have a freaking 60% candle right here. That's crazy. So we missed the boat on this, honestly, unfortunately. I think this actually might be overvalued. Our first overvalued stock. 269.8 million in sales, income of 18.2 million. 288, let's add. Yep, these people are taking advantage of the sales. Good for them. Okay. Yep, they're plateauing. Okay. They only have 0.34 cash and they had what? So I think it was 288. Yes. 288 minus 0.34. And total debt should be plus 0.34 to get back to 0, plus 0.34 minus the total debt of 9.48. They had more debt than that. Okay. Divided by 6.57. $42 stock, trading at 16. What's their liabilities? Total assets 87, total liabilities 6. Not a good ratio. This is still stupidly undervalued, unfortunately. I know this one's been on my list before and I gave it away because it was just like not realistic. Absolutely freaking annoying, crazy, stupid. Okay. Well, can't get them all, I guess. This one, it's just momentum is just moving it up. So, I mean, it is undervalued. Momentum based, watch for scalps. Yeah, I mean, it's not something I think we're going to catch the bottom, but I think maybe if we're like intraday trading, which I've done on my challenge. It could work out. Okay, this one looks like it's on the way down. This one's on the way down. It's becoming more. Yeah, this one's kind of like catching a falling knife. The 14.49 forward PE means it's gonna be decently priced. Gosh, it ran from 3 to 26. I think we're just gonna have to pass on this one. I think it needs to come back down. It's hot. We can do the math real quick, but it's hot. It's way hot. 265.5 plus 26.5. Wow, revenues are actually... Wow, and net income, very nice. Okay. I could be wrong about this one, you guys. Okay, so plus 35.49 minus total debt. There is no debt, so we can do 0. Okay. So this divided by 12.44, $34 stock. It's down about 50%. So RELL, decently priced. Watch for reversal. PT 34. All right, guys, let's move on to the next one. All right, next up is RMR. Real estate. Wow, 7% dividend at $21. Okay, in terms of bottom plays, I mean, I feel like we are close to the bottom. We're going to want to see some institutional buying big time. And let's run some numbers really quick. Okay, so they make 912 million point 4 in sales. They have plus 43.9 income. Great for them. Let's look at their, revenue is growing very nicely. Income is growing very nicely. Cash, they got a bunch of cash, so plus 189.09. No debt. Total assets 542 million, total liabilities 335. That's actually pretty good. Okay. This is actually not bad. Coming back to this. Let's divide this by 15.23, which is the shares float. 23. $75 price target. Currently $21. This is very, very interesting to me. Institutions, RMR. Old data says 84%. I'm gonna have to say it's more. 89, not too much more, but I mean this is very appetizing. I just want to look down. Okay. Yeah, this looks pretty good, honestly. What are their gross margins? 29%. You guys, this is actually really good looking. Wow. Yeah, I like this. RMR. Wow, yes. Undervalued. Inst add high dividend. I'm concerned about that dividend. Let's see. Control F dividend. Yeah, I mean, it is a high dividend. Let's see if they stop dividends during the Great Lockdown. RMR dividend. I'm just curious if they stopped dividends during the great lockdown. That must mean they might not have a great financial footing. If they did continue dividend payments through the great lockdown, then that's another story. 2020, okay, they did. I mean, they continue to distribute dividends through the thick of it. This is a buy. This is a buy. This is a buy. Wow. Wow. Okay, this is yep, top 5 for sure. RMR, JAKK, IIIN, HSII. Wow. Okay. Let's move on to the next one. SPOK. 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 10% dividend? Ooh, something's got to be up here. Ooh, look at this candle. Bearish. Okay. It's going to need to come down for a while. Let's see what a good price is to look at this. So 133.9 million in sales, positive 3.2 million income. Let's add, look at these buys. Look at these buys. Very nice, very nice. Revenue declining. Net income going positive. Good, 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 good. Plus 35.75 in cash. Total assets 244, total liabilities 7.72. So that's 3-to-1 ratio there. Total debt 0. So let's do 201 divided by 18.96. $10 stock trading at $12. Yeah. So we're going to want to see this come down around $10. What are institutions doing on this one? SPOK. 51%, down from 59. This looks like a good long-term reversal. Let's watch this one at 10. Earnings over the past 5 years positive 20%. That's good. I could feel comfortable holding this one long term. It literally went down 1, 2, 3, 4 years in a row, 5 years in a row. So I think this is a pullback down to like the 10 area, and then I think we're going to see a move reversal. So not a bad company. VRTV, Veritiv. All right, we got in the billions here. Let's just look at the bigger picture. We missed the mark. It's a trend. 220, well, I guess from the low went from 6 to 160. All right, let's do our handy dandy calculations. We are messing with billions and millions, so it's going to be longhand. 6,800,000,000 plus 328,100,000 plus 1,460,000,000. All right, let's add cash, remove debt. What's going on? Sorry for that. Okay, let's add cash, remove debt. Ooh. Revenue is going down. CEO sold not that much. Okay. What about net income? Net income is stable. That's a good word for it. Cash and short-term equivalents is 40.6 million, so plus 40,600,000. Debt, ooh, minus 278,200,000. Okay. Divided by 13 million, 10,000? Yeah, $641 stock. So, let's do quick review. This is trading at 2021 levels. Not bad. Okay, that's fine. VRTV. VRTV. I'm going to say institutions might be loading or buying here, or they might be selling. Institutions own 99.3%, and the new data shows 110%. So they're buying. Baupost increased their position, Dimensional increased, Vanguard increased, and BlackRock decreased. Okay. I mean, $90 will be very sick. If they could do $90, that would be sick. This is a really great looking stock, though. And I think insiders bought a bunch. Was that? No, that was a different one. Yeah, insiders barely sold. This is yeah. Okay. I'm gonna bold that one because that one is gorgeous. All right. Next page. We just got one. Wire. Let's check it out. All right. Big numbers here. All right, let's do the math. 2,960,000,000 in sales plus 675,800,000 income plus 3 billion market cap. Let's add cash, remove debt. Revenues stable, so is income. Okay, cash, wow, plus 730,560,000. Yes. Total debt 0. What? Divided by 17,009,000, 90,000. $431 stock trading at 170. Yeah. Yeah. This looks great. Institutions own 103. I'm guessing it's a lot more. I'm guessing 110. 119. Oh, baby. Wow. Vanguard decreased. BlackRock, same. Dimensional added. Wow. Wow, wow, wow. Yes. Okay, wire. Very nice. Big inst add. Undervalued. Yeah. Okay, guys. So we just reviewed 21 stocks. The best ones, in my opinion, are HSII. It's at $25 with, based on my calculations that I do, which I just made up. It could be at $75. IIIN, it had a huge institutional additions. It's undervalued, a great chart setup. Going to review that one a little bit more, but institutions are loading like crazy for some reason. Maybe they know something we don't. JAKK, great sales. Institutions are buying, very undervalued. RMR, this one was really good. Undervalued. Institutionals add very high dividend, continued dividends throughout the Great Lockdown. So I think in terms of real estate plays, this is a good looking one. VRTV, really good stock, undervalued. It's got a $600 price target, and it's currently 107. And then Wire. Just very nice here. Big institutional ads, undervalued. It's just a great looking stock. So yeah, we are gonna look at just this volume shelf right here too. Just whoosh. So yep. 5 really good stocks out of 21. I mean, there were a lot that were really good, but these ones were just like really standing out. So yeah, I hope you guys enjoyed this content. If you made it this far, please consider subscribing, and I will see you all later. Bye.